What's up, Facebook? Ty Crandall with Credit Suite here, and today we're talking about business loans. Before we go into the holiday, we're going to dive in and decode a bunch of different ways that you can get financing, even if you think you can't qualify, even if other people have told you you can't get approved, even if a bank has denied you. And what we find is that a lot of people think they can't get financing because a bank has denied them. A lot of people think that they can't get financing because they're not even going to try to apply at a bank because they don't think they meet the criteria. So today we are diving in and we are going to talk about how you can get a business loan even if a fortune teller predicts that you will fail. And literally about 3/4 of our chalkboard today is all about these different types of financing that we're going to dive into and decode. My goal for you today is to talk about, I don't know, like 20, 25, maybe more, different ways you can get financing so you can figure out a way to get the money that you need to grow your business, maybe even start your business, even if you really do think that there's no way you'll qualify, or even if you do think or other people have told you that you may not qualify. So let's get to the topic at hand. How to get a loan even when a fortune teller tells you or predicts that you will fail. So first of all, you have to know that conventional banks have strict qualification requirements. And when we talk about conventional banks, what we're ultimately talking about here is we're talking about the big banks. We're talking about Bank of America. We're talking about Regions. We're talking about Wells Fargo. We're talking about the banks that you have a relationship with. And because you have a banking relationship, you probably expect that they may be willing to help you with getting business loans. These are referred to as your conventional banks. Well, the thing you need to know is that these guys have really strict guidelines, okay? It's not a very good place to go for startup loans. As a matter of fact, you're not going to be able to go here for startup loans, and you're not going to be able to go here if you don't have collateral or if you have poor credit. These are just not the places to go. So a lot of people think because they're a startup or because they have credit issues that they can't get approved, and the truth is you can't get approved at these kind of banks, not to say that there's a lot of other places you can get approved with. Now, they're often going to want 2 years or typically 3 years worth of tax returns before they're even going to lend you. So if you're not in business 3 years, you won't have 3 years tax returns. You're not even going to be able to get a loan. So rule number one, don't even go to these big banks if you're less in business than 3 years. They're just not going to touch you, okay? And you maybe, at best case, get one credit card from them at best. But if you're going to get a credit card from a big bank like this, then you're better off with a program we'll talk about today called Unsecured Business Financing, where you could get 5 to 8 of those similar credit cards to get 5 to 8 times the money than your bank would give you. So stay away from banks, especially in the beginning stage, because what happens is they're not going to help you with credit issues. They're not going to help you as a startup. They're not going to help you in these scenarios. And the reality is what they will give you, this one single credit card, you could get 5 to 8 times that from a source that specializes in that kind of financing. So not where you want to go. As a matter of fact, 89% of applications at the big banks are actually denied. So 89, nearly 90% of them are denied. So in order to get approved, you would need to have solid cash flow. And remember, that's going to be verifiable per these tax returns, not just bank statements, okay, enough to repay the loan. You'd have to have a track record of profitability. That's what they're looking for on these tax returns. They want to see that you have increasing revenues year to year. Revenue goes up. They want to see you have profits, and the profits go up as well. And they also want to see that you have success or experience in a similar business endeavor. Look, I am a big fan of conventional bank loans. I'm a big fan of SBA loans. As a matter of fact, our funding process for our clients is done in 3 stages. We call it our business blueprint. Stage 1, get all the money you can get now. Stage 2, get to term loans and line of credit. Stage 3, get to SBA loans. But here's what you got to know. With SBA loans, you really need to have really good personal credit. You need to have good business credit. You need to have good bank credit, which means you need to have an average of at least $10,000 in your bank account over the last 90 days. On top of credit, you need to have some kind of collateral, typically equivalent to the amount of money you're borrowing. So if you're trying to get 100 grand, you have to have 100 grand in collateral to even get these kind of bank loans. And the third thing is you have to have revenue as verifiable on your tax returns and profits. So it's very important as we get near the end of the year, your accountant and you may believe that spending all that you have makes the most sense, so you pay no taxes. But I can tell you that if you want to get an SBA loan over the next 12 months, you need to make sure that you're showing profits on those tax returns. As I just mentioned to you, in our funding blueprint, stage 2 and 3, term loans, lines of credit, SBA, it all comes down to having some kind of profit on the tax returns. So as you're doing your taxes, keep this in mind, because if you don't claim a profit, congratulations, you save a little money on taxes. The problem is you also lose another year that you're going to have the ability to get the lines of credit, the term loans, and the SBA loans that you really want. So again, I'm a huge fan of conventional bank SBA loans. It's just not the place to go when you have credit issues, when you lack collateral, when you don't have the revenue, when you don't have the profit. This is just not the way to go. Okay, so remember, SBA loans, you got to be near perfect. You got to have the credit. You have to have the cash flow. You have to have the actual collateral to be able to qualify. And you also have to remember that in this case, both the lender and the SBA are evaluating all aspects of your business. Okay, so that is the thing. Keep in mind, remember, SBA loans, they're going to ask for P&Ls, they're going to ask for balance sheets, they're going to ask for tax returns, they're going to ask for resumes. And it's not just that they're going to ask for it for verification purposes, they're asking for it to scrutinize everything. So if all aspects of your business, credit, cash flow, collateral, if all those things aren't perfect, that's okay. Then you want to graduate to get to this point. Know you'll need collateral to get there. Know you'll need the tax returns with the profits to get there. Know you'll need the credit fix to get there, and work on those things, okay? Don't just say I need those things and don't have them so it won't work. Now you know what you will need, so work on those things so you can do what we try to help our clients do. Graduate to the next level to eventually get to the line of credit, the longer term loans, the SBA loans that these conventional banks really have. So remember, private investors are also probably not the best place to go, because they often want to see tax returns as well. Now, venture capital is not really an option unless you have some kind of groundbreaking product or service. I mean, these venture capitalists, these guys are looking for really high risk and really high return, right? They're going to want quick returns. They're going to want you to sell a business in 3 years. They're going to want to see a concept that can be turned over and make them a ton of money within 3 years or less. So venture capital at this stage is probably blocked off as well. But again, many loans are available. Even if you can't get these type of things, it's just not coming from these initial banks. It's not coming from these conventional banks. So I'm starting by telling you why we're not to go for a reason, because I don't want you to get discouraged. I don't want you to listen to all this hype thinking that people are telling you you can't get approved, or you believe you can't because the bank won't approve you. They probably won't. But that doesn't mean you need to start there. There's all these other options that are available. Just know it's where you want to end up. Not where you want to start, where you want to end up. Get the cash flow, get the tax returns, get the profits, improve the credit, get the collateral, and graduate to SBA. But don't start there. Where do you start? Let's dive in. Let's take a look. So again, a lot of this startup loans really comes down to having another kind of strength, okay? So for example, there's financing specifically if you just want to put up commercial signs or wrap your vehicle. There's financing to actually buy or lease equipment. Leasing becomes available 1 year in. Okay, these are the type of things that you can buy and get specific type of service for. Now, I show you this because this is one of the common mistakes that business owners make. Is business owners say, look, I need a loan for $20,000. And we say, well, what do you need the 20 grand for? And they say, I need 5 grand for equipment. I need 5 grand for office furniture. Well, then you don't really need a loan for 20 grand. What you need is equipment financing for 5 grand and an Office Depot credit card for 5 grand. Then you only need a loan for 10 grand. The smaller amount of loan that you're looking for, the better chances you have of getting approved. So take what you're looking for and break it down. How much money do you want, and what are you going to use the money for? Because again, a lot of the reasons you may use that money for, you don't need a loan. You need equipment financing. You need inventory financing. You need to wrap a vehicle or put up a sign, or you need a credit card at Office Depot, or you need a credit card at Apple or Dell. And when you do that, that kind of credit cards and that kind of financing is way easier to get than one big loan for 50. So stop trying to get one big loan for everything you need. Break down what you need, and then it's easier to find individual financing for a lot of those needs, which sounds cumbersome, but it's not really cumbersome. Okay, it really just comes down to getting you the most financing because you're getting what you need from a lot of different sources instead of getting all of the money from one source. And if any of this makes sense, feel free to go to creditsuite.com/get funding. And there you can answer a few questions and we'll tell you all the financing you can qualify for. And we never charge you a dime, okay? Lenders will charge you rates and fees and we even help you with that. But that way we can help you through this process without you having to pay a bunch of money to do it. So there's a lot of collateral-based loans as well. These get interest rates of 5% or less. Now, SBA loans are about 8% right now. So this is way cheaper than even SBA loans. They don't care about personal credit, and they don't care about revenue either, okay? So collateral-based loans are a great way to go. We're going to discuss a few of those today. And this is where you're using stocks or 401k or inventory or account receivables or purchase orders or bonds or IRAs, even commercial real estate. All this type of financing can work to actually get you what you need. One of the big type of financing we're doing right now is commercial financing with actual properties. And here's what's interesting is that you're able to come in, buy the property you're leasing, pay the same payment you're paying now with no money down. So that's what I mean by specialized financing. So if you're looking for something like buying the building that you're in or owning it and having an asset instead of paying rent every month, that's one of these type of options when we look at using collateral to actually qualify for financing. So don't forget, you also need to work with guarantors, okay? They may help leverage their assets or their credit in exchange for something, just helping you, a percentage of ownership of the business, all these other type of things, okay? Often they're gonna want less than a venture capitalist would. So keep that in mind, and 401k is a very typical kind of financing for them. So does everything, including manage like 3 soccer teams, even though we have 2 kids. I can't do the math, but she does this. And one of the things we just talked about last night is she goes, it's interesting, we just had this board where we gave out lottery tickets. People bought tickets. They bought a ticket to get this board with all these lottery tickets we bought. And they raised like $1,500, and she was surprised by that. And I said, the reason is because it's easier for parents to sell those tickets when the person they're selling it to has something that they could possibly get in return. Like they could win this lottery board and get all this money in return versus just going out and asking people for money. The reason I bring this up is because over 75% of business owners are getting money from family and friends. But when you can use their credit or their assets, then it's much easier for you to go and ask them for something, and you could even get them a rate of return as well. You don't feel guilty going to mom or dad or grandpa to ask them for money when you say, hey, mom, dad, grandpa, here's the deal. I got an amazing opportunity, and I'd like to get you 10% ownership in it if you could help front the capital. And by the way, here's the best news. I don't even need you to give me any money. I just need to use your credit as a guarantor to get unsecured credit lines, and you can even make sure I make the payments because the only risk you have is if I don't make the payments, or you can use your stocks or bonds or IRAs or 401k as collateral, and the best part there is you still earn the interest, you still get the returns, you just would lose them if I default. So as long as we work something out where you know I won't default, then the only way you lose is if I default. But if you don't, well then you fund the business without putting money out of your pocket, the business grows, and you get X in return, percentage of ownership, etc. And that kind of scenario, it's much easier to talk to people about providing money in the business because just like the lottery card example, they're getting something in return. You're not asking them for a favor. You're giving them 10% ownership of the business at a ridiculously small amount of money without them even needing to take it out of their pocket. So you create a scenario where it's really beneficial for you to talk to people about getting money without them needing to come out of pocket with the money to actually give you. So don't forget, guarantors become available or become very, very, very good at a very, very strong asset because even if you don't have the collateral, even if you don't have the credit, you can still then use them to get approved. So to give you some options here, 401k financing, no tax penalties. You're using a 401k or IRA as collateral. You can get 100% financing of what's in the 401k, often 5% rates or less, and you could typically get credit lines and okay, so great way to go if you or a guarantor has 401ks, has IRAs. Now, something similar to this is also securities-based financing. This is when you're using stocks and bonds where you can get as much as 90% of the value of those. You're still earning the interest on them. You're getting up to 90% of the stocks advanced to you in a credit line, okay? And again, you're getting super low rates less than 5%. So again, the idea here is maybe you have a 401k, IRA, stocks, or bonds. Maybe you don't. But it's easier for you to go to people that could be potential investors in your business, ask if they have those assets, and when they do, why wouldn't they? Okay, look, if you're thinking about putting 20 grand into a business, why not leverage $20,000 worth of your stocks instead? Why not? Because the reality is you still keep the stocks in place, you still earn the interest. The only drawback would be if you default. So it lets you invest the money without physically having to take it out of your pocket. So great options for you to do. Securities, stocks, bonds, IRAs, 401k. Now, account receivables or AR financing now allows you to get up to 90% of your receivables advanced to you within 24 hours. Now, they're going to want the receivables to come from another business or the government, but rates are super low as about 1.25%. Okay, and what happens with this, and let me explain how AR financing works because it's something you need to know about. As a matter of fact, AR financing is the number one most common kind of assets, or AR, account receivables, is the number one asset that SBA uses. And this is why I'm telling you about it, because my goal is not just to help you get money. My goal is to help you get all the money you can get now and graduate to an SBA loan. So let's look at what the end looks like. The end looks like that you're typically going to use account receivables as your asset to get SBA loans. And what that means is it means that you're going to have your customers let you pay on payments. So instead of, for example, clients that enroll with us to build business credit don't typically pay us all in once. If they do pay us in one payment, they get a huge discount. But we let them pay over 7 to 9 months, and those payments are considered account receivables. Now, if we want to go get financing on that money, then what that means is it means instead of us waiting 9 months to get paid, the lender would give us 90% of what's owed within 24 hours. Then the rest of it would come to us once we actually come in and get those receipts, or once the person actually pays those invoices. So it allows you to make it easier for your customers to pay you. You can still get the money almost immediately without them needing to pay it to you, and it gives you a very valuable asset that increases the value of the business, and that was also something that could be used by people that want to buy your business or be used as collateral to get SBA loans. So a great type of financing. Now, again, a lot you can do here. Now, another is inventory financing. You've got to have inventory of about $500,000, and you can get a line of credit for about 50% of that inventory value, but low rates, 5 to 15% depending on risk, and all they're really looking for is a good inventory management system. When we look at this kind of scenario, we look at people that are trying to put inventory on shelves or have too much inventory on shelves and need to leverage that to get physical cash. If that's you, that's an absolute great way to go. Now, another kind of financing here, as we talked about, is equipment financing. Now, this is where you could buy equipment for your business. Now, you could lease equipment as well if you've been in business about 1 year. Now, they're going to want first and last month's payments as down payment. Okay, but it's a great way to go because we even help clients get financing for this first and last month's payment. About 650, 620 credit scores, even 580 credit scores with some higher risk equipment financing that you can actually get. Now, you can also come in here and do this equipment sale leaseback. So this is similar to these other assets where maybe you or somebody you know has an asset that you could use as collateral to get financing. And that asset is equipment. So if you own equipment, you could get as much as 50% of that equipment advanced to you in a loan and use the equipment that you or somebody else own as collateral. Now, a lot of other type of collateral can work here too. If you want to buy and flip properties, you could use the properties. If you want to get commercial vehicles, you could use commercial vehicles as well. You could also come in and get commercial real estate financing. Buy the building that you're in with no down payment. So that's another option that can work for you. Now, SBA startup loans or SBA micro loans are called 7M. 7A is a typical working capital SBA loan. Now, with this, you can get up to $35,000 in working capital. The average loan size is about 10 grand, and the funds come directly from SBA. So this is unique because usually with conventional bank loans, you're qualifying with SBA and the lender. But with these loans, these micro loans, it's only SBA. You cut the lender out, so it's easier to qualify for these smaller micro loans, the 7M program. Now, you also have what's called cash flow financing. This is the easiest kind of financing you can get. You need to be in business about 1 year or have $10,000 a month or more in actual financing. Okay, so if you're 1 year in business and $10,000 a month in revenue. Now, there are some sources that will do this with 6 months in business or $5,000 a month in revenue. Those are usually higher rates through what are called merchant cash advances. Now, another option here is Square and PayPal. Now, these guys are basically similar. They are forms of cash flow financing, but instead of getting about 12% of your annual revenue advanced, with this one, you can get about 30% of your annual revenue advanced to you. I mean, you can get up to about $500 to up to about $100,000 in loans with Square. With PayPal, you can get up to $500,000. Okay, and again, about few months in business, about 3 months in business, these guys start to lend you money. As a matter of fact, I tell everybody, look, you should run part of your credit cards through PayPal and Square because these are some of the easiest loans to give. You could show them a track history of doing good business. And the nice thing about that is the rates are super cheap. They don't charge a bunch in fees. There's no credit check. And you can get financing in some cases up to $100,000 or even $500,000 or more. Now, another one is my favorite option, and this is called unsecured business financing. Now, with UBS, the way that it works is it's basically 0% rate credit lines that you can get even as a startup. You get 5 to 8 credit lines. It's strictly based on good credit. You need to have about a 700 type credit score or higher from you, or a guarantor can also work. And again, you can get up to $150,000 in 0% credit lines. The best part is this credit reports on the business credit reports, not your consumer credit reports. So not only are you getting the money you need, you're building business credit at exactly the same time. So you're building business credit while getting up to 150 grand at 0%. The best program I've ever seen for startups. Now again, this makes sense. creditsuite.com/get funding. Remember, we never charge you a dime of money to help you with financing. So let us help introduce you to this and figure out what you can qualify for. Now, another great option, of course, is business credit. And this is where we're building credit for EIN that's not linked to the personal social security number, right? There's no personal guarantee. Even as a startup, you're able to get approved. You can get approved regardless of personal credit, okay? It doesn't depend on lenders, for example, or excuse me, it doesn't depend on other lenders or any of these other factors, okay? So what it really comes down to is by getting better business credit, you get better rates and terms on the loans that you get as well. Look, business credit isn't just an alternative funding source if you can't get other kind of loans. Business credit determines if you'll get loans, how much you'll pay, and the rates and terms that you're going to pay as well, and how much you'll get. As a matter of fact, your business credit reports even have a credit limit recommendation of how much money you should be lent. So if you want to have the most money at the best terms, if you ever want to get SBA, you should consider looking at business credit as well. Now, a lot of other options we haven't talked about here. Don't forget about angel investing. So as a startup, angels are a great way to go through the first 2 stages of building your business, the first 2 rounds of funding that you may get. They work great for startups. You get $10,000, $50,000, but you're going to have to give up a percentage of equity in your business. Also, don't forget grants. USDA, HUD, in your local community, your town, your county, grants are possible as well, which is free money. It doesn't even cost you anything. It's money that you actually can be just given if you go through the process to apply. And don't forget about some of the other stuff that we briefly mentioned. House reseller program, get money to buy and flip real estate. Okay, if you have some experience, a few properties under your belt, great option. Commercial vehicle financing, great option to go with as well. You can either come in and use commercial vehicles as collateral to get loans, or you could build business credit to be able to get auto vehicle financing without personal guarantees and even without personal credit checks. So some of the other great ways. And also, don't forget peer-to-peer lending. We talked about peer-to-peer lending a couple weeks or so ago. When we talk about sources like Lending Club and Prosper, we even talked about a great source here with peer-to-peer lending when we talk about Upstart. So remember, when we talk about peer-to-peer lending, this is where peers are lending you money instead of other businesses, or instead of lenders. Okay, some of the biggest are Prosper and Lending Club. Lending Club's the biggest, about 45% of the market. Prosper was the first. Funding Circle only deals with businesses. Okay, Upstart works good for startups, and Street Shares, and college grads too, by the way. And Street Shares works great for military veterans. So lending is becoming one of the most popular kind of financing that's out there. And what it basically is you have people taking their own personal money, as little as $100. They're adding it in, it's pooling together, and that money is then lent to you based on these proprietary algorithms that these kind of guys have. So this allows you an opportunity to actually come in and get money easier, because instead of rigorous bank qualification requirements, you're able to get it from your peers instead. So a lot of other funding options that you can get, but this is some of the, 20 or so of the most common ones that you could use to fund a business. Remember, if any of this makes sense to you, then go to creditsuite.com/get funding, and that allows us an opportunity to see all the money that you can qualify. We're one of only a few sources in the country that deal with all legitimate funding programs in one place, and we do that so you never have to worry about money again. We help you with all the money you can get now. We help you graduate to term loans and lines of credit, then we help you graduate to the final tier of SBA loans, and we help you all the way through. So whenever you need need money, you got one source to call. We deal with over 1,000 lenders. We deal with all these funding programs and more. We can even help you with stuff like crowdfunding and things like that. So feel free to check us out, creditsuite.com/get funding. If you missed any of that, watch it in its entirety on our Facebook page. And don't forget, we also have a free guide on business credit building at facebook.com/Credit Suite. That's our Facebook page. Go into Messenger, type EIN, and you'll grab our free guide. I hope you all have a very Merry Christmas. I will not see you until next Wednesday, but I will see you after the holiday. So I hope everybody has a great, awesome holiday, an excellent Merry Christmas, and I also have a happy holiday and a Merry Christmas. And again, if we can help you with any of your funding needs, check us out at creditsuite.com/get funding. Bye, everybody. Have a great day and a Merry Christmas.